Welcome to Cold Brew Finance's U.S. End of Week Deep Dive for Friday, March 14th, 2025, covering market moves in indexes, sectors, stocks, and global markets. Kicking things off, I'm Max Profit. Key indexes posted significant losses this week. The Dow 30 Index led declines, falling 1,313 points to 41,488. The Nasdaq Composite and the S&P 500 both recorded their fourth consecutive weekly decline. The S&P 400 midcap extended its losing streak to 7 weeks. Market breadth reveals widespread weakness. The Nasdaq Composite showed particularly bearish sentiment, with over 2,500 declining stocks versus just 604 advances. The S&P 500 saw twice as many decliners as advancers, while the mid-cap 400 had nearly 4 times more declining stocks. Short-term returns highlight market pressure. The Nasdaq Composite leads month-to-date losses at -5.8%, followed by the Dow and S&P 500 at -5.4% and -5.3% respectively. The Russell 2000 has declined 5.5% this month. Looking at 10-year performance, the Nasdaq Composite leads with a 13.8% average annual return, while the S&P 500 and Dow delivered 10.6% and 8.9% respectively. The Russell 2000 notably lagged with 5.2% annual returns.
Checking out best and worst performing equities, I'm Penny Stock. NewGenIvf led with an extraordinary 1,625% surge to 1.7, hitting a new all-time low amid strong upward volatility. Regencell Bioscience and Servomed both soared over 200%. Weekly returns were remarkable, with NewGenIvf posting a 1,626% total return and 327% average daily return. Regencell Bioscience and Servomed both achieved over 200% weekly returns. Looking at longer-term performance, Regencell Bioscience shows a 158% one-year return, despite a 3-year decline. Radius Recycling posted a 46% one-year gain, while maintaining positive momentum in its trend. Among large caps, Intel led gains, rising 16.4% to 24.4. Supermicrocomputer advanced 10.2%, while AES, ConocoPhillips, and Vistra each gained around 9%. Weekly returns show Intel leading with a 16.5% gain, followed by Supermicrocomputer at 10.3%. Year-to-date, Supermicrocomputer stands out with a 38.3% return. Long-term performance shows Vistra up 97% over 1 year and 455% over 3 years. Supermicrocomputer boasts an impressive 1,068% 10-year total return, despite recent yearly decline. Among decliners, Wellchange Holdings plunged 80.3% to 0.55, hitting new lows with strong downward volatility. Hepion Pharmaceuticals fell 73.5%, marking its 4th consecutive weekly decline. Weekly returns reveal severe losses, with Wellchange Holdings down 80.4% and Hepion Pharmaceuticals falling 73.5%. Year-to-date, Hepion Pharmaceuticals has declined 95.2%. Among the worst-performing stocks this week, Wellchange Holdings plunged over 80%, hitting a new all-time low of 0.55. Hepion Pharmaceuticals dropped 73.5% after 4 consecutive down weeks. FST Corp and Applied DNA Sciences both saw steep declines of nearly 70%. Leading the large-cap declines, Teradyne fell 20% to 86.74, marking a new one-year low after 3 weeks of losses. Delta Airlines dropped 13.2% amid strong downward volatility. Adobe slid 12.4% to hit a new yearly low of 393.63. Looking at average daily returns, Teradyne shows the steepest decline at minus 4.1% over the past week. Delta Airlines and Adobe both averaged around minus 2.5% daily losses. Year to date, all 5 stocks have recorded negative average daily returns. Examining long-term performance, Microchip Technology shows the largest one-year decline at minus 40%. Despite recent weakness, Adobe maintains a strong 10-year annual return of 17.6%. Teradyne also shows resilient long-term growth with a 16.1% 10-year annual return.
And now on to U.S. sector performance, where energy and utilities showed strength, gaining 2.4% and 1.6% respectively. Technology and basic materials both fell 2.3%, with technology marking its 4th consecutive weekly decline. Market breadth reveals significant weakness in technology, with 605 declining stocks versus just 88 advances. Financial services showed similar weakness, with 510 declines against 110 advances. Utilities maintained positive breadth with 56 advances versus 31 declines. Weekly returns show energy leading with a 2.4% gain, while technology lags year-to-date with a minus 9.7% return. Financial services has been particularly weak this month, down 7.2%. Long-term performance highlights technology's dominance with a 10-year annual return rate of 19.7%. Financial services and utilities have delivered more modest returns of 9.4% and 6.1% respectively over the same period.
Energy stocks showed notable strength this week. ConocoPhillips led gains, closing up 8.11 to 98.74. Diamondback Energy followed with a 10.27 rise to 150.38, while ONEOK added 6.87 to reach 96.44. Weekly returns highlight strong performance across energy stocks. ConocoPhillips topped weekly returns at 8.9%, while ONEOK and Diamondback Energy followed with 7.7% and 7.3% gains respectively. Year to date, EQT leads with a 9.4% return. Looking at longer-term performance, ONEOK and Diamondback Energy show impressive 10-year returns of around 115%. EQT stands out with nearly 100% growth over 3 years, while Coterra Energy has remained relatively flat over the decade.
Underperforming sectors show significant weakness. Consumer defensive led declines, falling 4.3% with a mixed negative trend. Consumer cyclical and communication services both extended their losing streaks to 4 weeks, dropping 3.8% and 3.6% respectively with downward volatility. Market breadth reveals widespread weakness. Consumer cyclical shows particularly concerning breadth with 433 declining stocks versus just 59 advances. Healthcare similarly displays broad weakness with 862 declines against 219 advances, while other sectors maintain notably negative advance decline ratios. Recent returns highlight sector struggles. Consumer cyclical shows the steepest month-to-date decline at 9%, while consumer defensive and communication services are down 5.7% and 5.6% respectively. Year-to-date, consumer cyclical leads losses at minus 14%. Long-term returns reveal varying performance patterns. Communication services shows the strongest 3-year annual return at 15.2%, while real estate lags with a minus 3.1% annual rate. Over 10 years, consumer cyclical leads with a 10.2% annual return despite recent weakness.
Consumer defensive stocks showed significant weakness. Target hit a new one-year low at 104.68, down 9%, marking its sixth consecutive weekly decline. Estée Lauder companies also fell 9% to 66.66, while Campbell Soup dropped 8.2% to 38.38. Strong negative trends characterize these movements. The weekly declines have contributed to substantial year-to-date losses. Target leads the downside with a 22.6% year-to-date decline. Estée Lauder follows with an 11% year-to-date drop, while Campbell Soup has fallen 8.4% this year. Long-term performance metrics reveal significant challenges. Estée Lauder shows the steepest decline, down 73% over 3 years. Target has dropped nearly 50% in the same period. Only Colgate-Palmolive maintains positive returns across all timeframes, though modest at 2.7% annually over 10 years.
Thanks for watching. I'm Max Profit, along with my AI co-host, Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.